Wall Street rallies on Thursday. The Dow gains for the 7th straight day after weekly jobless claims data offers fresh hopes for interest rate cuts. European markets rally as well. The FTSE hits yet another record high after the Bank of England holds interest rates at 5.25%. Stocks in the Asia Pacific trade higher, while the GIFT Nifty is also suggesting a strong start for the Indian markets. Crude prices hit a one-week high above $84 a barrel as demand expectations rise. Gold also gains on hopes of a rate cut. After posting a record quarterly profit in the fourth quarter, SBI Chairman Dinesh Khara tells CNBC-TV18 that he expects advances to continue growing at about 16% going forward. Also says that the costs of deposits have plateaued and that they will expand the net interest margins going forward. And in key earnings to track today, a mixed fourth quarter is seen from Tata Motors as the domestic commercial vehicle segment slows. Eicher Motors is expected to report strong profit growth and higher margins in the fourth quarter, while a sequentially slower quarter is seen from Cipla as the US market growth plateaus. It's a Friday morning and you're watching Power Breakfast here on CNBC-TV18 in the Mumbai News Center. I am Hormas Fatakia. Let's first take a look at how the Asian markets have opened this morning, and it's green across the screen in the Asia Pacific. The Japanese indices have also opened higher, so have the Korean indices. The Taiwanese index is up 0.25%, but the Hang Sen is the standout performer this morning, up almost 1.6% now. This index is trading at the highest levels in 9 months now. It's leading the gains in the Asia Pacific. So a very good start across the Asian indices. Japan, South Korea, Hang Seng, all of them trading with healthy gains. And also pull up the GIFT Nifty as well. The GIFT Nifty is also suggesting a positive start for our own markets. A 64-point uptick is the implied open right now for the GIFT Nifty, and we do need a positive start considering all the volatility we have seen all through the week. So we'll keep an eye out on all of these cues. But the handover from the US markets was also strong as Wall Street ended Thursday's trading session higher. The Dow rallied over 330 points, while the S&P 500 also surged 0.5%. The tech-heavy Nasdaq climbed 43 points at the close of trade. CNBC's Pippa Stevens gets us all the wrap of the action on Wall Street.
Markets were up across the major indexes Thursday as the Dow hit a 7-day winning streak after new jobless numbers raised investor hopes of a rate cut later this year. The Dow up 331 points, the S&P gaining 26 points, and the tech-heavy Nasdaq adding 44 points. Jobless claims hit their highest level since August 2023 today, in a signal that the job market could be shifting. The Labor Department reported today that 231,000 people initially filed for unemployment benefits last week, up 22,000 from the previous week and higher than estimates. The increase follows a string of monthly strong hiring reports. Federal Reserve officials have consistently said they're looking for a job market cool down as they weigh interest rate cuts and work to bring inflation down to their 2% target. TikTok announced today, as part of its attempt to combat misinformation, that it will label artificial intelligence-generated videos and photos made from outside of the app. The social media site says it will use a digital watermark to differentiate the content. The company says the change is effective as of today for images and videos and will be coming to audio-only content soon. That's what's happening here in the U.S. Back to you in Mumbai.
And staying with the U.S. market, let's also listen into some important voices on the outlook for the U.S. economy and what the Fed's next move could be.
The inflation problem here in the United States, I think, caught the Fed, wrong-footed at the very beginning. They moved very quickly to get things under control. But, the last mile, as we're calling it, has proven to be really pretty challenging. And, one of the things that they did, I think, wisely was move away from forward guidance. But when they're in a world of being data dependent, it makes it very, very difficult to know exactly what they're going to do because they themselves don't know what they're going to do until they see the data. Markets are underestimating, how serious the Fed is around the 2%. Every time you get a slightly weaker GDP report, the notion is, the Fed's going to cut to offset a slight weakness in GDP. A slight weakness in GDP may be the natural outcome of restrictive policy. It may be what they're really hoping for.
So we started this year thinking we would have 3 rate cuts and that they wouldn't start until the summer months because we needed to see that disinflation work its way into the data, and we're still sitting there, and we think that's going to be the case. When we go into the summer months, there are certain seasonal factors in terms of the data that we could see in employment. We obviously got the jobless claims this morning, which was something I wouldn't read too much into it. But you start to add up some of these data points, and you're seeing a slowing in the employment backdrop. And that, coupled with some disinflationary pressure, could actually be something that could put them in a position to cut this summer.
Let's get to the final update in our global market wrap this morning. Thursday was the day of new record highs for the European equities, with the pan-European stock 600, the German DAX and the British FTSE, all of them closing at new peaks. Meanwhile, the French CAC settled with gains of close to 60 points. The big cue from the region, though, was the Bank of England's decision, which left interest rates unchanged at 5.25% as widely expected. The bank's MPC voted 7:2 to keep bank rates on hold. Let us listen in to what Bank of England Governor Andrew Bailey had to say on inflation trends, the rate trajectory and a lot more.
Before our next meeting in June, we will have 2 full sets of data for inflation activity and the labour market, and that will help us in making that judgment afresh. But in saying that, let me be clear. A change in bank rate in June is neither ruled out nor a fait accompli. In fact, conditional on the market implied path for bank rate, the projection suggests that inflation could fall below the inflation target towards the end of the forecast period. So let me turn to monetary policy. With the progress we've made, to make sure that inflation stays around the 2% target, that inflation will neither be too high nor too low, it's likely that we will need to cut bank rate over the coming quarters and make monetary policy somewhat less restrictive over the forecast period, possibly more so than currently priced into market rates.
And that's all we have for you in the global market action. But how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, Vivek joins in to get all the market cues we need to watch out for. Good morning, Vivek. It's been a forgettable week for the Nifty, but what are you picking up this morning?
Well, you're right, a forgettable need, one that market participants would like to forget in a hurry, given the kind of sell-off that we've seen. And what is actually surprising is the fact that while global equity markets are doing very well and all of the macro data, at least at this point of time, are quite supportive, despite that, the FII selling pressure has been quite intense. Like we mentioned, US markets, especially Dow Jones, up for the 7th straight session, and Indian markets are complete reversal of that particular development that we're seeing across equity markets. Oil prices, last week were at a fresh low actually, but what happened this week around is that there has been significant outperformance, especially in terms of oil prices. So yesterday, WTI futures, again, another day of gains is what they saw. Now coming to the Indian markets yesterday ended the session at a 2-month low. The 22,000 level was something that was under pressure throughout the trading session. Broader markets witnessed significant underperformance in yesterday's trading session. In fact, the mid-cap index down almost 1,000 points. Now, coming to what exactly dragged the market lower, it was earnings reactions. Earnings reactions across the board saw significant and exaggerated selling pressure if the numbers were a miss. So, which of the stocks that saw significant pressure? L&T, Asian Paints, Tata Power, and the other pocket of the market that saw significant selling pressure yesterday was Muthoot as well as Manappuram on the back of restrictions as far as cash dispersals were concerned. Now, results, reactions today, what is it that we need to watch out for? BPCL, MGL, these are some of the names that will react to their results that were declared post-market as yesterday, and quite a lot of results lined up today as well. So that will be something that the market will watch out for. Cipla, Eicher, Tata Motors, ABB, all of these companies will come out. Now, the GIFT Nifty is indicating a gap up, but that has been misleading so far, given the fact that any gap ups have been so aggressively too. So that will be something we need to watch out for.
Vivek, thanks a lot for sharing all those cues and all the stocks that Vivek highlighted just now. Sudarshan will tell us about them in detail. Sudarshan, good morning.
Morning, Horma. So we'll start with one Nifty company that reported earnings after market hours yesterday. That is BPCL. Headline numbers were in line to marginal beat. EBITDA has risen 48%. Margin was up 250 bips sequentially. Gross refining margin came in at $12.50 versus estimates of around $15 per barrel. And company has also approved bonus issue in the ratio of 1:1. Next is Mahanagar Gas. It has reported marginal miss, but volumes were in line. Margin has fallen 340 bips sequentially, but volumes were up 2% at 3.77 MMSCMD, and EBITDA per SCM has fallen 14% sequentially to rupees 11.49. Next is Escorts. earnings were in line, but commentary remains muted. Company says FY25 tractor industry volume growth is seen in low to mid-single digit, but Q1 demand is expected to be weak on lower Rabi output and elections. Next is about earnings were below estimates but are up year-on-year. Revenue is up 7%, margin has risen 100 bips year-on-year, and company has also declared final dividend of rupees 410 per share. Suryodaya Small Finance Bank, healthy business momentum has added NIM improvement. NIM has improved 30 bips sequentially. AUM was up 34% and disbursements were up 30% year-on-year. Keep an eye on life insurance companies. These companies have reported monthly update for April. Sector has reported healthy growth. Annualized premium equivalent for companies were up in the range of 21 to 36%. On APE front, ICICI Prudential, Max Life and LIC have outperformed. On premium, LIC was biggest outperformer. Its premium was up 113%. And except HDFC Life, all the companies have seen premium growth in the excess of 25% in the month of April. Last is Manappuram Finance. Company has replied to query with respect to RBI's advisory. It says advisory with respect to rupees 20,000 for disbursing cash loans won't hamper the business because online gold loan forms 50% of gold loan book and is fully paperless. Even for branch originating loans, customers of Manappuram Finance prefers direct transfer, so it won't hamper the business of Manappuram Finance.
A much-awaited clarification there from Manappuram. Thanks a lot, Sudarshan, for joining in and listing out all the stocks that you need to watch out for. And lastly, Nigel joins in with news from the FNO space. He highlighted the VIX a few days earlier, and people on the street are talking about it now. Morning, Nigel. How's the setup looking like?
Well, that's right. You know, Hormuz, we highlighted the fact that the VIX normally rises up ahead of a big event. And in this case, it's the election. We saw that in 2019 as well. The market pulled back roughly around 5%, and the VIX did scoot up. Now, that's continued. You know, even yesterday's trading session, it's higher. I'll say more than fear, it should be a repeat of 2019 because no one is building in any kind of, negative verdict coming in from this election, and continuity is something that the markets are moving with. So that's the point on the VIX. What about the FIs and index futures? Well, in yesterday's trading session, they added shorts. And they added close to around 60,000 short contracts, which takes the short position to around 67%. Now, we'll pull up a graph and it'll tell you in absolute terms, the bar chart should come up for you. It's moved to around 1.5 lakh contracts on the short side. Just to word out here, for this contract, that 1.56 lakh is more like 75,000 contracts. Why is that? Because the contract size itself has changed. For the Nifty, from 50, it's come down to 25. So because of that, it appears that we are at around 1.56 lakh. But if you want to compare it with history, actually we're at around 75 to 80,000 contracts. So net short, yes, but not very, very aggressively. We have seen even 1.5 lakh in the past in the old contract format. Just want to make that point out for our viewers. The Nifty Bank, if we need to build on any kind of green that we're seeing, it has to play a factor out here. It's down 5% from its peak. It's down for 7 straight sessions. And that's the one that needs to bounce. Needs to give Nifty some kind of support. The levels you're looking at on the, when we were moving lower, the 20 DMA was a bit of a support. Now it becomes a resistance. The 50 DMA is your first reference point. And you don't want it to go to around the 100 DMA. So those are the levels you're looking at on the Nifty Bank. And that's going to play the key role if we need to see a relief rally, which could be very much in the works. What about the Nifty? Well, the PCR is at around 0.9 odd. So it's not yet at around that 0.6 because yesterday one contract did expire. That's the weekly expiry contract. The Nifty levels we're looking at, 20 and 50 DMA, that's a distant away. But in the near term, the April swing low is very, very important. 21,777. The bulls will like that level to get defended and they'll hope for a bit of a relief rally from here on. So prepare yourself for wild swings. But after a weak week, I won't be surprised if we see some kind of a bounce in today's trading session.
Interesting. Those two levels, the key ones to watch out for, the April 19 swing low and the March swing low as well of 21,710. Thanks a lot, Nigel, for sharing the FNO setup this morning. Time for a short break. Up next, we get to a few excerpts from our conversation with SBI Chairman Dinesh Kumar Khara on the bank's fourth quarter numbers, the outlook going forward and more. Stay tuned. Back on the other side. Back with us on Power Breakfast on CNBC-TV18 and on to the big positive earnings surprise from yesterday. State Bank of India delivered a strong set of fourth quarter numbers. The net profit beat estimates, the loan growth remains strong and the asset quality is also the best in 9 years. In fact, our colleague Ritu Singh spoke to Dinesh Kumar Khara, the chairman of SBI, to discuss the quarter gone by. Let's listen into what he had to say.
We'll continue to monitor the capital requirements and also the factor that our ROE is much more than that of our loan book growth. So that also is self-accretive as far as the capital is concerned. If required, we will look at the capital raise, but otherwise we should be in a position to support it with the plowback of the profit, which we have been doing for past couple of years. Well, when it comes to the advances growth, which you have seen about 16%, as far as the domestic book is concerned, we expect to see similar trends going forward. And why we are looking at this kind of a trend is essentially attributed to the kind of growth which is expected in the GDP. And based upon that, we are quite confident we'll get to see similar growth right from the corporate to the SME to the retail and also in the agricultural sector. The trends are quite strong. Well, the slippages were essentially seen in agriculture and SME, but I would also like to mention about out of this 3,886 crore worth of slippages which happened in the last quarter, we have already pulled back about 886 crores. So I think I don't expect that it should be any more a challenge. But yes, of course, nevertheless, we'll remain vigilant and ensure that we maintain a tight control on the slippages. Our broad assessment is that this 5% has to be done over 3 years period. So that will give sufficient elbow room also, considering the focus on the infrastructure. I'm sure RBI will be in a position to look at the merits of recalibrating the provisioning requirement. So our broad back of envelope calculation, whatever it is, it's not really something which is a cause of worry for us.
SBI chairman there speaking to CNBC-TV18. Moving on to some important macro data expected later today. India's industrial output for the month of March is likely to come in at 5.24% compared to 5.7% in February, according to a CNBC-TV18 poll. Now, this after core sector growth slowed down to 5.2% in March, while mining output growth hit a 19-month low of 1.2%. Remember, 8 of the core industries account for over 40% of the items included in the industrial production index, with mining alone accounting for 14.3%. Now over to some other news now. Air India Express management and agitating cabin crew have reached an agreement at conciliation talks facilitated by Delhi's Labour Commissioner. The airline has agreed to reinstate 25 cabin crew who had been sacked. More than 150 flights have been cancelled in the last 2 days. Madhiya Mujawar is here with all the details. Madhiya, over to you.
Well, the conciliatory talks went on for over 2 hours and it was finally decided by both parties to resolve the dispute. So all cabin crew members who have reported sick have agreed to report for duty with fitness certificate immediately. Air India Express management has agreed to reinstate the 25 cabin crew who were terminated for reporting sick. The management has assured that all issues of cabin crew raised before the management and during conciliation proceedings will be looked into and resolved. Remember, the protesting cabin crew have alleged inequality and mistreatment. They accused the management of sidelining senior employees and said there's disparity in the salaries and those cabin crew from Air Asia India. They also alleged that Air Asia India employees were given permanent payroll while Air India Express staff were terminated without explanation. Now, both parties will meet again to take stock of the situation on 28th May in presence of the Labour Commissioner. So that's the update we have so far.
Madhiya, thanks a lot for joining in, getting us all the updates on this Air India issue. Time for a short break. Up next, we get you cues from the commodities market. Stay tuned. We'll be right back. Welcome back to Power Breakfast, and as promised, let's get you cues from the commodity space now. Manisha Gupta joining in with all the updates. Manisha, good morning. What are you picking up?
Morning, Harman, and a very happy Akshaya Tritiya to you. It's a gold buying festival, so I'll start with gold first. And overnight, we've seen prices gain up quite strongly. So we are up by 2% in this week. There are expectations of rate cuts now coming in stronger. The Bank of England has signaled cut coming in the month of summer. And with the way the U.S. jobless claims have been, higher than expected and at an 8-month highs. There are now a 69% probability of a U.S. rate cut as well in the month of September. In any case, we are looking at strong over-the-counter demand. Central bank buying has been supportive. The Asian demand has been surging as well. And with the geopolitics going on, the gold prices clearly seem to be in favor. Not just gold, silver prices gained up by nearly 3.5% overnight. We're trading at a 3-week highs for silver. It has been a good going across metals where copper is up 1.5% overnight. So we are inching back to those 2-year highs when it comes to copper as well. Well, with the US dollar softening and expectation of a Fed rate cut going forward, commodity is definitely getting a boost from here. Even the crude oil prices, which were trading at around 83 yesterday, are trading at 84.5 right now. So good going across commodities as a sector.
Manisha, thanks a lot for joining in. A very happy Akshaya Tritiya to you as well, and to all our viewers who tuned in this morning as we call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call takes the action forward.